I think we're extraordinarily pleased with our results in 2021. I mean, that kind of growth performance has not been seen in more than a decade. But we also got to be realistic here. I mean, this was fueled by some tailwinds that had to do with the pandemic. And so what we are foreseeing now for the year 22 is a more normalized environment where we still track pretty significantly above the organic sales growth performance that we've seen in years like 2019, 2018, but it's going to be not as elevated as in 2021. So we're guiding to around 5%.
Clearly, inflation is an issue, a challenge you're facing like all of your peers. How strong are the inflation pressures going to be this year? And to what extent are you going to be able to offset rising input costs with higher prices?
They continue to be very strong. And in fact, I believe they're increasing over 2021 level. Part of that is the calendar, the fact that we expect the situation to last for the full year, not just for part of the year. Remember, it only started last spring and it kept accelerating all throughout 2021. It really covers all categories of input costs. So shipping rates, packaging materials, both of these are important because they can't be hedged really. Then, of course, several commodities are up, energy costs are up, trucking and shipping costs downstream to the consumer are up. And also, I think with inflation now raising its head, you also see labor rates going up around the world in key markets. So it's a difficult environment. We are exhausting all potential operating efficiencies first, of course, before we resort to pricing, because we know that in food and beverage, pricing has to be done responsibly, and we're doing that and practicing that. But obviously, in the face of the significant inflation we're seeing, we also have to resort to pricing. And you see that with our disclosures for 21, and we will have to continue to do some of that in 22.
So what does this mean for margins then, if you will be pushing through pricing in some form or another, but it sounds like the inflation pressures could be more dominant?
Yeah, so the 2021 actual for our underlying trading operating profit margin, which is sort of the key yardstick that we point to, was 17.4%. We're now for 22 guiding to a range of 17.0 to 17.5%. So there is a chance here, depending on where commodities and inflation go later in the year, that we could stay level with 21 performance, but there's also a certain potential downside factored into that guidance. Overall, is this cautious? Yes, it is, absolutely. But in a very volatile and turbulent environment, I think this is the right way to approach guiding. And we strongly have pursued a meet or exceed culture when it comes to our guiding activities.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.